about 3, 2, 1. As soon as that little circle stops. There we go. All right. Good afternoon, everyone. Today is Thursday, January 26th, 2012. January 26th, 2012. Whew. All right. I'm going to go over the trades that we're taking this morning in the live trading room. The trades that we filled on, the trades we didn't fill on, and all that sort of stuff. Let me start out by saying I tried to fill over here, but I didn't get filled, but Dwayne did. Here's Dwayne's DOM. All right, this is one contract, 11 points. Okay, that's Dwayne's DOM, one contract, 11 points. I'll go over all the trades anyway, but this was the trade right here that Dwayne filled on. Okay, it pulled back up to the BBC after the bearish cross. I'm pointing at the YM over here, by the way. After the bearish cross, the pullback up to the BBC, he filled here, MIT, and he exited the trade right down here at the MA1. We call this the window of opportunity, the area between the BBC and the MA1. We call that the window of opportunity. Okay, he took advantage of that window and got his 11 ticks out of that trade. Actually, I think it was 10 ticks.
Tell us, Michael, why do we call that the window of opportunity?
Well, thanks for asking. We call it the window of opportunity because...
Long-time listener, first-time caller.
Yeah. Thanks, caller. We call it the window of opportunity because typically, usually, after you get a bearish cross or a bullish cross, and you get a pullback to the BBC, this window of opportunity is going to be filled. Price will pull back to the BBC. It's looking for a place to pull back to. When it does this, it's looking for a place where there's either resistance or support. In this case, it would be resistance. This spot right here is where your order was sitting. It was an MIT order, which means market if touched. That means if the ask touches your order, it's going to execute your order at the market. So you're going to get at least a tick of slip out of it. But that's okay. You factor that into the overall calculation of the window of opportunity here, and there was 10 ticks between here and here. It actually went a full 20 ticks from your entry. I believe you got in at where did you get in? 39, something like that. It went to full 20 ticks, but you got out here at the MA1. What we anticipate the market doing whenever we have a bearish cross, we anticipate a short pullback, a retracement, if you will, to the BBC, and then for the market to continue in the direction that it originally was going. Okay, and usually, if it does continue in that direction, it is going to go to the MA1. Now, in this case, the MA1 had turned blue, which meant it may actually hold. The MA1 may actually hold the price. If it were red, you may have considered just letting it go, because if the MA1 were red and still going down, you would have anticipated it getting back on the other side of the MA1 and just going down with the market. I'll show you on a 2100 tick ES trade how that was used to trail a stop a little while ago by one of our partners in the room. Okay. But that was the trade right there that you took. You actually took 10 ticks out of that trade. I mean, I know your DOM says 11, but you took 10 out of that one and 1 out of the trade before that. And I'll show you that one in just a moment. Here we go. Put those back up there where they should be. All right. Now over here, you see we had the bullish cross, and your entry was right here. Once again, I didn't fill, and you did because you had an MIT order and I had a limit order. The window of opportunity was between here and here, the MA1. Okay, once again, you see it filled that window of opportunity, and then price retraced back down. Now, you were looking for it to go farther. You were looking for more of a move up, so you had advanced your stop to +1 tick once it came up here. Actually, once it got over here, you would advance your stop to +1 tick once it closed on the other side of the MA1. And right over here is where it came back down and stopped you out at +1 tick. That's why you have 11 on your DOM. 1 from this one and 10 from the second one. All right. We didn't have any valid trade setups this morning on the 4-tick range, which was unusual. I did accidentally have it on a 5-minute for about the first 10 minutes or so, first 10 or 15 minutes. But we didn't have any valid trade setups over there. Not even a George setup. George is usually, you may get more of those. Well, the first one. Anyway, as long as the elbow is flipping back and forth, you usually get a George setup. But because of the way that it all came together, we didn't get any setups on the 4-tick range this morning. All right, we are now getting a fresh bubble with a pullback up to the BBC. This is a possible place for a setup. 1318.5 is where you would be looking to enter it. It would be an MIT order at 1318.5. It would put you in at 1318.25. The target would be the weekly trading zone right there. Okay. The trade that I was going to show you that a partner took advantage of this morning with trailing a stop was right here. Now this is on the 2100 tick. I did not take this trade because it was going right into the weekly trading zone, and that is just not in my trading plan. But the MA1 dropped below the BBC, so we had a bearish cross of the BBC. The cycle was had crossed down below the 50. All right, everything was looking pretty bearish right here. A few of our partners shorted right up here at 1326 quarter. They shorted right up here. Now, once they had shorted up here, I know some guys took 1.5 points, some guys took 2 points, some guys took 3 points, but I know that what I had suggested in the room, and I know that, well, at least one of our partners had done, was trail his stop behind the MA1. As soon as price closed below the MA1, he was trailing his stop behind the MA1. And he ended up getting out right over here with 3 points on the trade. Okay, once price moved up above the MA1, he ended up getting out there. Now, obviously, if he'd have stayed in it and stuck it out a little longer, it would have kept going down another 5 points or so. But the idea is to make money, and he did. All right, I didn't take this trade because it was going right into a weekly trading zone, and that is not in my plan. Actually, it is in my plan not to trade into zones. Let's see, that was the 2100 tick. This was the same area on the 10,000 contract over here. We had a partner this morning ask if this was a possible long setup right here at the weekly trading zone when price had gone up above the zone a little bit and then pulled back down into it. My answer was not yet. I thought it was just going to consolidate here and probably move down. It did end up moving up to the next zone after the consolidation period, but all the indications were that it was going to consolidate and likely move down. Now it popped up 4 points from there up to the next zone, almost up to the next zone, to the tick almost, before it moved down, and then we got this big move down. Now this right here is what I was anticipating it doing right over here. So it popped up a little higher before it did that. Let's see, moving on to other things. Okay, that's the ES and the YM this morning. Does anybody have any questions about those? Dwayne, perhaps? Any questions? Anyone? Did I miss anything? All right.
Allow me to unmute myself and see what I can see. No, I think you did good.
All right. Very good. Very good. Well, then I will move on to some other things that we looked at this morning. All right. As Dwayne had mentioned, tonight is Thursday night partners meeting. Every Thursday night we have a partners meeting. It's for partners only. If you're in here on a trial, you may want to find out what it takes to become a partner so you can get into the partners meeting tonight. Our partners meetings are generally very informative and full of good stuff. I'm sure we'll be going over these trades that I just showed you here tonight in more detail, and I'm going to show some other things tonight that I think are worth taking a look at.
Do you have any guest speakers tonight?
I don't know that we have any confirmed on the schedule yet, but I do think that we are going to have at least one guest speaker tonight.
Okay.
But nobody has emailed me and said they have something that they absolutely want to bring up tonight. At least not yet.
Somebody will want to grab the mic.
Yes. But I know, we typically go over Mike R's trades, and so it's easier for me to just let Mike R go over those trades because then he can answer all the questions. Um, all right. That said, this is the 6E500 contract. Along the line of Jeff G's trades, just the piercing of the envelope from the bottom here. There were a couple of those this morning. You see I put the little arrows on them in those spots. I have some stuff on these charts. We'll go over that later on tonight. But I am going to actually put another little arrow right over here. Okay, because we pierced the envelope there. And another one here, because we pierced the envelope there. And that is food for thought for tonight. We'll be going over some of that stuff tonight. All right, in the partners meeting. I'm not going to include any of the results of the 6E trades in the recaps. Okay, at this point, this gave some profit potential. This also gave a great amount of profit potential. Over here, we had more profit potential, and this last one is still a work in progress, but I believe it is going to prove out to have some profit potential. We'll go over all this stuff later on tonight. Okay, I wanted to bring that over. Let's see. I have another 6E chart. I just need to show up. Here it is. All right, somebody has got an echo in the background here. On this, what we're looking for is a break of the elbow, a pullback either to the BBC with an up close, so you would have gone long right there, or wait for the close above the MA1 for the confirmation. You would have gone long there, up to there. Okay. On the other side, you want to have divergence when you do this, but right here, after the divergence, though it turned out to not be much divergence, the lines were diverging right there. After the lines start to diverge, then the next pullback to the BBC. This happened to be a down close and a close below the MA1 at the same time for the move down. Not suggesting anyone trade the 6E right there because the market actually closed at an hour ago. Here's another picture of it. Broke the elbow to the upside, pulled down to the BBC, had an up close right here with diverging lines. All right, you could have gotten in there, you could have gotten in at the BBC, you could have gotten in on the up close, or you could get in just for further confirmation on a close above the MA1. All right, now that happened a few times this morning. Okay, here was another one. Well, here was the divergence right over here. So this one didn't really come together exactly right because the divergence was way over here. All right, and then it broke the elbow to the downside. I mean, you could have done it right here. The pullback to the BBC right there, the down close, the move down. There wasn't much in that one. Okay, but you see it happening over and over again. Okay, and that's pretty much what I wanted to point out to you. And we'll go over that as well in the partners meeting tonight. Something else that's similar to that we actually took a couple of trades in this morning. Crude oil. Okay, I'll scroll back and show you the crude oil. Very similar to that. Okay. Again, this is something we're not gonna actually record as profits or losses in the recaps, at least not at this point. Okay, but we did go through these trades this morning. Basically, you're looking at the same exact thing. A break of the elbow on the upside, a pullback to the BBC with an up close. So the up close was right here. Using a 10 by 10 bracket, you would have worked out 10 ticks out of that one. Over here, the other way, break of the elbow on the downside, a pullback, a down close, and there it goes. All right. Over here on the other side, break of the elbow on the upside, pullback, and up close, and again it goes up. All right. You guys seeing the pattern here? This is one that I took live in the room. A break of the elbow on the downside, a pullback, a down close. I could have taken, I think, 8 or 10 ticks out of that at one point, but I ended up taking 2 or 3. Now, crude is a very emotional market, so you have to be quick with this market. All right. Break of the elbow on the upside. The pullback was actually over here. Okay. Pullback below the MA1 with the MA1 being above the BBC. Pullback was over here. The up close was right here. So I went long right there, and I ended up getting out of that one over there after I locked in some profit. Okay, so I just wanted to point that out, show you that there's more than just the YM and the ES that you can do with this. So I've shown you crude, the 6E, YM, and the ES. All right, that I believe is where I am going to wrap it up for the morning. Again, 11 ticks profit, 11 points profit on the YM per contract. Dwayne had one contract on there, so 11 points profit per contract. All right, that is it. If anybody has any questions, type them in here, and I'll be happy to answer them.